Hello everyone, welcome to this webinar today. ESS BIZTOOLS and our associates COVID-19 survival panel. This is our 10th weekly edition. I'm joined today by Ash Evans, the Managing Director of AAA Financial Services. How are you today, Ash?
Very good, thanks, Peter. How are you?
Good, thank you. Good, thank you. Okay, well, we'll just, Ash will be joining you very shortly. Welcome to the people who are watching us live from Facebook. And our presenters today are Ashley, who I've just introduced you to, and I'm the other presenter. And my name's Peter Towers. I'm the Managing Director of ESS BIZTOOLS. If you have any questions during the webinar, can you please type them into chat? And we will answer the questions later on. Or you can send an email to me, peter@essbiztools.com.au. I just want to... Okay, so I now want to introduce Ashley Evans. And we'll just do the switch across now, Ash, and you're on the air. Thanks.
Thank you very much, Pete. Let's get that set up. Is that all up there now, Pete?
Yes, thanks.
Fantastic. Good afternoon, everybody. It's a tropical Friday up here in Townsville, and I've got the shirt on that we're wearing in Townsville these days. So I think it's even got a few Easter bunnies on it, so a bit out of season. But anyway, I hope everybody's had a successful week. Peter's asked me to have a chat today about the funding sources for your clients' business operations. Obviously, typically the people that are going to attend this event are accountants. So basically, what I'll do, I'll just step through our slideshow here that we've got. And obviously that's who we are, AAA Plus Financial Solutions and AAA Consulting. We just started that up a couple of months ago. Just the headings that we're going to talk about, who we are, our team, traditional funding sources and alternate funding sources. So that was probably the two that I had. A few little slides here. I won't waste too much time on these. This is just where we're located. A little bit about ourselves. We've been going since 2001. Got 13 employees and the next photo I'll show, we've got a few grey hairs, so a lot of us have had a bit of experience. So coming down to the traditional funding sources, I guess I just thought I'd run through how we're seeing things and as a broker. We cover everything from personal loans, home loans, commercial, business, rural and equipment finance, largely across North Queensland, Central Queensland, but we do have a number of clients that have grown and merged across the country. So we do deal with the lenders in different areas as well. So obviously, yeah, it's no secret, obviously the major lenders up there, ANZ, CBA, NAB and Westpac, typically, I guess historically that those lenders would be, as far as competitiveness, as interest rates historically and approvals is probably where, you know, over the last 30, 40 years plus that most people have gone to, I guess, and either directly or probably more recently over the last 10 to 20 years, the brokering industry has begun to grow. The 60% of home loans are now originated through finance brokers around the country. And I think it's around 15 to 20% or thereabouts of commercial. So there's a bit of growth there. So what we're seeing with the major lenders, I guess there's some changes with the COVID-19 over the last couple of months. I guess initially they've acted very quickly, and a lot of deferments, hardships, but what we found there is that they've converted a lot of their resources, not only technology, but staff across to handling the deferments and hardships. So that is been a major hindrance over recent times with processing times, particularly equipment. Obviously being the 30th of June coming up next week, you know, we're already getting told that if we haven't got it in by today, it's not going, they can't guarantee it's going to settle. So there's certainly some pressures that are coming to bear there. We are seeing, look, different areas, different locations will present different outcomes with your different lenders. We are seeing a bit of a drain in our area, particularly in sort of further north and central Queensland on good quality staff in those areas. And obviously good quality staff can promote the story of the client and the broker up to the credit manager. And yeah, there has been quite a lot of movement in staff, and I think that's attributed largely to pressures, sales pressures and the like. So what that's meant, obviously there's other lenders, and I'm typically talking Suncorp, BOQ, and obviously around Queensland, BOQ, Bendigo and Adelaide Bank. Look, these are typically, they've been around for a long time, and in many cases they do provide a good option and a good alternative, and generally very competitive in their rates. I'll just give you an example with BOQ. We've got a tremendous local fella in our equipment that just looks after equipment, and we have been spoilt, a little one-man operation. He's been around for a long time. Outside of this last couple of weeks, he would typically give us an approval in sort of half an hour. So I'm sure you'll find those different conveniences around from time to time. Interest rates are there or thereabouts. Is he the most competitive every time? Maybe not. You might be sort of 0.2% out sometimes, but that little bit extra in interest, you can get things approved and documented within a day or two in many cases if needed. So I would just implore people to consider the service standards as well. Second, well, what I call second tier lenders, Liberty, La Trobe, Think Tank are probably three that we have used for a long time. Think Tank probably more over the last sort of 2 or 3 years since they've come in. But Liberty and La Trobe, look, they've been around for 30 years plus. We as a broker are very cautious about who we use and who's behind them, because typically if we are provided with poor outcomes and poor service standards, etc., and lack of communication and changing in interest rates, all that sort of stuff, it reflects poorly on us, and it's a poor customer outcome. So, but look, we've had great experiences with those people. What we are seeing is the major lenders are, I guess, their approval. Many years ago, they were probably approving a much larger percentage of the business that was presented to them. And look, over recent years with the Royal Commission and other tightening of credit policies, the economy has a bit to play with that, of course. But typically, what is in the sweet spot for the major lenders is becoming more and more smaller. And so the Liberties, La Trobes, to a lesser degree, the Suncorps, BOQs, but those second tier lenders, Think Tank, all three of those, Liberty, La Trobe, Think Tank, they're doing self-managed super fund lending. I think pretty much most of your major banks are out of that now. And if they're not, they're, your minimum deposit that you've got to have in your self-managed super fund, I think NAB's like $5 million, so it's going to exclude most people. So I would just encourage people, and look, interest rates, yes, they are a little bit higher, but not ridiculously. You might typically pay 1% higher than what you would with a major bank. So it could be just people on probation, if it's a residential home loan, those sort of things. Well, Liberty, La Trobe, they'll consider those. And with Think Tank, I refinanced one from Suncorp there. It was a commercial loan. I think it was a 65% lend. The business actually had a few ups and downs, which Suncorp at the time didn't really like. And and it was shorter terms, quarterly reporting. I refinanced them to Think Tank. The interest rate, I think, might have been 0.5% higher, 30-year term, so it gave them a relief there with lower repayments, and there was no reviews. So sensational outcome for the clients, less pressure, lower repayments, etc. Debtor finance, again, there are a couple of major banks, NAB and Westpac, still doing debtor finance, but you do need to have minimum turnovers, which typically is $2 million, so it doesn't suit the smaller businesses. Cash flow finance and Scottish Pacific are probably two lenders that we use, and specialist lenders. We've got a terrific fella in cash flow finance there, Bruce Meredith, who's again can provide approvals very quickly and been in the business a long time. So debtor finance, I really do think very topical at the moment, because coming up once the JobKeeper, things do drop off in a few months. I would strongly consider, as we've touched on in a couple of previous webinars, Peter, I'd strongly encourage people to really start planning for what you think your business is going to look like in a couple of months, 2 or 3 months when that JobKeeper does stop. And perhaps getting an approval with debtor finance could be a way to assist your cash flow. More and more people, I can see it, more and more people in business are going to stretch their suppliers out, stretch their payments out. So instead of getting paid in 30 days, it might look like 45 or 60 days for you. So don't leave it too late, please. And debtor finance, you don't need typically any residential or property security. It's just on your invoice itself. So strongly encourage you to look at that. The next slide that we've got is alternate funding sources, and I think the photo that I've got up there is very apt. So obviously, I guess you're typically your first choice for obvious reasons would be to your major bank, or some of those second tier lenders if it necessarily sits there or suits there. But even outside of those, there are some other lenders that are coming into the picture, and one that I didn't put in there, and I'm sorry when I did my slide, but is the fintech industry. And lending as we have known it is going to be rapidly changing, as it already is, but in the next year or so it'll be even more so. So the fintech, a lot of what they do is use algorithms and that sort of thing, so your approvals will be a lot simpler, a lot quicker. Interest rates, as I know a couple of the senior people in the vault, Steve Weston, and typically they're going to be able to provide probably lower rates than your major banks because of their cost of doing business. Being a fintech, they don't have bricks and mortar and branches around the country, so just stay tuned with fintech. I think that'll be, and the plan is, obviously doing deposits, then they're doing personal loans, home loans, and then typically, as I understand it, they're going to start moving into commercial lending and the like. So perhaps not quite there yet, but stay tuned. That will be a good option and put a lot of competition into our market, I believe. So equity crowdsourced funding, Peter and I have had a fair bit of involvement with this at a high level. And look, again, I think that this was actually announced, correct me if I'm wrong, Peter, but it was November 2018 from my memory, and where the government actually provided 7 aggregators with licenses to do this. Some of them are quite big overseas, particularly in the Europe and American industries. Unfortunately, I don't think, I'm a big fan of this equity crowdsourced funding. It's not obviously for every business or every person, but I am a big fan of it for the right person and the right situation. Unfortunately, I will say, and Peter will probably back me up, that it just hasn't taken off in Australia yet, whether that's a promotion thing or a system issue at the moment, but might be a little bit of both, how they're actually delivering it and promoting it out into the industries. But I firmly believe people that are on this webinar, the accountants, I really think you guys can play a huge role in equity crowdsourced funding. There's some really good stories. I can't think of the exact name, Peter, but the Beehive, is in about 50 or 60 different countries now, raised over 50 odd million, I believe. So, there's some really, really good stories there. Raising equity against equipment. This used to be probably fairly common, and there's been a period of time, and even to a lesser degree now, but where probably the last 10 years, the lenders, traditional lenders, major lenders, have really shied away from raising equity against equipment that you've paid off or equipment you've got equity in. The reason given is that it's seen as raising working capital, which to me, it still doesn't make sense why they won't do that. But look, I'll just put that in there. I have had a couple of wins over probably recent 12 months, and one of them was an existing a major bank. And so don't rule it out. Obviously, it's got to be for the right customer, etc., and the right purpose. But that it's not full flavour yet, but there is certain lenders that will consider that. And typically, if you've had some good years and you've paid your facilities off, you've got the equity and you need some money to grow or to restructure or what have you to help with working capital, I think that's another possibility. A little bit outside of the box over recent years, but another very good way. Trade finance. So for people that need to do importing, we've got a number of clients, whether it's drill rigs, heavy machinery, and the like, where they're built or manufactured helicopters, the Robinson R-22s and 44s there in America, and a lot of the other heavy gear often come out of Europe. So how do we fund that? Well, we provide a doc ELC. We can't do an equipment finance facility like a shadow mortgage or a lease until it actually hits Australian shores. That's ultimately just the laws of the land. But what we can do is to do a trade finance, a document LC, which is a document line of credit. So they basically provide a letter of credit that's handed over to when they put the piece of equipment onto the boat. There's exchanging of documents, and when it actually hits Australian shores, we then convert that from a doc ELC to a shadow mortgage typically, so it pays that facility out. So that's something that's fairly common, and look, most of your major banks, all of your major banks do it, but most of your major banks will have a specialist trade finance department, and very, very good to deal with. I'll talk about interest rate protections, exchange rate protections as well. So that's something to consider. And look, lastly was EFIC. This came up with a mutual person, or a person that Peter took me out to just recently. The Export Finance Investment Corporation. Again, I do need to revisit this and just update myself a touch with it, but I'll just relay a bit of a story. I had a client that was tendering for a major mining contract, and with that particular the mining company, they actually needed a guarantee, which previously they hadn't needed, and that was going to tie up significant amount of money via either security or cash on deposit to support the guarantee. And obviously that's a performance guarantee in favour of the mine. And so what we actually explored through some sources and some conferences I'd seen previously with the Trade Commissioner, Stephen Siderboe at the time, that's probably 5 or 6 years ago, is the Export Finance Corporation, which is a government body. As long as you're involved in the export line or export chain, which this particular person was, and they weren't the ultimate, they weren't actually, filling the boats up and supplying it, but they were certainly involved in digging the minerals out of the ground. And so we actually secured a pre-approval through them. Ultimately, that one didn't go ahead, but it was approved, and under pretty favourable terms and conditions. And over time, you can actually reduce that commitment to EFIC, but very favourable terms. So look, that's just something. Typically it's a grant or a guarantee, which you can then either provide directly to the mine, or sometimes the mines or people like that will require a bank guarantee. Not even from a government. Obviously, the government body is more stronger, AAA rated than any of the major banks. But in this particular case, they actually wanted a bank guarantee. So the government provided guarantee, and off the back of that, one of the banks provided a bank guarantee. So a very different and unique proposal, but it's without that, potentially the client wouldn't have been able to fulfil the contract terms and conditions. So again, that's just an alternate finance. So that's probably the main parts of my presentation today. I'm just mindful of the time, Peter, but I might just have a minute or two. The other remaining slides that I've got here is just a little bit about ourselves and our history. And I have left some tips in there that I've had from previous presentations. I thought they were still pretty topical about some levers that the businesses can use, and it does have a bit in here about the debtor finance as well, which I thought that sort of goes into it a little bit deeper. A little bit about ourselves, what we're about, how we work, and often I would encourage people as accountants, probably lastly, I would really just encourage yourselves to to encourage the clients with lending to review their position. I've actually had 2 or 3 situations in our business over the last three or so weeks where one particular client, we've saved them $100,000 a year. They're a cattle grazier, obviously a reasonable size loan, but it was literally, we'd been with this particular bank for 20 years, and we just assumed that we did have a good relationship, but managers had changed, and it probably wasn't as strong as what it previously had been, and so we tendered it out, and it was like in high threes, 3.9, and we ended up with a 2.9. So in that particular case, it was actually a bit over 100,000. We've had one up on the tablelands where there's a mixture of small crops, avocados, mangoes, and cane, and that's probably around 80,000. I just went down to the Burdekin yesterday, which is a strong cane farming area, and that particular one there, I haven't priced it up yet, but this particular farmer is probably paying in mid to high 4s. I'm certainly confident we can get that down into the 3s, probably low 3s. So again, there'll probably be maybe $50,000 in savings there. So the clients, if you, as accountants, when you're doing the books and obviously you're getting these statements, and I'd just run your eye over where the rates are looking, and if they're a bit out of the mark, I call it a health check. I'd encourage the people to do it on an annual basis, because you'd just be surprised how out of whack some of them are. Typically, they don't always review their existing clients. They're more inclined to be sharp with new clients. So just a couple of tips there from me. All right, well, thank you very much. As Peter said, if there's any questions throughout this or afterwards, I'll send this slideshow on to Peter, and please reach out to me either on email or phone. I think I've got that on my last slide there. And thank you for the opportunity, Peter.
Okay, thank you very much, Ashley. I just had a couple of questions here, though.
Okay.
And I'll just, before we go on to them, if any accountants that are watching this who are not situated in North Queensland would like to talk to you, you're happy to talk to them?
Yeah, absolutely, Pete. I'd love to. I was actually just talking to some people and an accountant down in Orange a couple of days ago. We've got clients in most states. So, yeah, no, I'd certainly welcome that anytime. Absolutely. Okay.
And the Export Finance Insurance Corporation, it's been around a long time. I used to be a Chief Financial Officer, Company Secretary, and a major meat exporter many years ago, and we dealt with them. And very regularly, and they were a good organisation. Now, they've changed a bit over the years, but how did you find as a broker dealing with them? Because I think a lot of accountants have probably had no interaction at all with that organisation.
Absolutely fantastic, Peter. I was lucky enough to attend this conference up here in South Townsville 5 or 6 years ago, and as it turned out, there was actually a couple of ex-ANZ employees from Townsville that were working with them. So, look, it is, I found it, the information and the commercial acumen and the assessment procedure was almost identical in dealing with a major bank. They kept me up to date regularly. It was quite often after hours. They were texting and touching base with me too. So they really care. I shouldn't say it, but sometimes the government bodies, you might not always have that as strong as in private practice or industry, but I couldn't praise. There was a manager and an assistant, and they were just absolutely sensational to deal with, and really caring, and provided evidence and documents as I needed it, and worked very closely with myself and the client. So
very good. So again, AAA can assist accountants anywhere in Australia if they've got an issue that they'd like to discuss with you, and you can give them a proposal, what you could do for them?
Yes, 100%, Peter. We'd welcome that, and we're growing all the time. We've got a team of about 10 experienced brokers on our books in our office here. We do travel a lot, and we're more than welcome. If the need be. I mean, we can do a lot over phone and emails these days, but I often jump in a plane. I know it's been a little bit different over the last couple of months, but I'd more than welcome, quite often jump on a plane to Brisbane, Melbourne, Adelaide, etc. So if that's what's needed, I'd be more than happy to do that. And I actually really enjoy the diversity that brings with it, different businesses, different locations. And yeah, we're keen with, Paul and I are 49, 48, 49. We've been in the business for 19 years now, and so we've still got, 15, 20 years in front of us, and we're trying to build a good succession plan behind us. So that's just one thing I think that, there is, I'm sure, as with big corporates, and the banks are no different, and they are losing a lot of experience, and so I think brokers are becoming more and more in hand, and there's a huge turnover of bank managers we're seeing, and that can be very frustrating with the clients, and at least with us, we started when we were 28, 29. We've got a lot of clients, that are now retiring, that started at 40, and their daughters or children are coming through and taking over in a lot of cases, and we're growing with them. But the biggest thing we see is the frustrations. We've picked up a couple of clients in Central Queensland where they've had 6 managers in 2 years, and that sort of stuff. Whereas if you've got a broker involved, like it's our business, we're going to be here for a long time. We can actually sort of handle that. It's us that can liaise with the lender and take all of that heartache out of it as much as we can. So, but no, I certainly welcome the opportunity. We do want to expand further around the country, so no, it'd be great.
Okay, well that's very good. And for the accountants and business advisors watching this webinar recording, please bear that in mind, because I think you're all going to have a lot on your plate in this next 12 months. And if you can project manage and pass some of this work onto an expert, which obviously Ashley and his team is or are, so you will get the best possible service for your clients. So thank you very much, Ash, and hopefully we'll come back to you with any other questions we get later on.
Yeah, sure.
Today.
Thank you very much, Pete.
Thank you. I'm just going to switch again, and we will get started. And I'll just... Okay, so now is the time for business advisory services to assist your clients to meet the post-COVID-19 challenges. It's a bit of a mouthful, but there's a lot of interesting comments in that. And that is my presentation for today, because I think it is a wake-up time for accountants. Now, I know you've all been very busy for the last 3 months. I've been writing a lot about COVID-19 and presenting 2 major webinars each week for the last 10 weeks. And I know from what our accounting subscribers are saying to me, everyone is very busy. There's still tax returns. There's all the work that you've been called upon to do as part of this coronavirus campaign, the new information released by the government and the tax office at times hasn't been quite at the standard that you've come to expect, where things have had months of timeline to be presented in. But unfortunately, I think you're only at half time if you were playing a football game. There's still a lot of work to be done. It's not just getting the clients through to the 30th of June or the 30th of September. And that's what I'm going to share with you now. I think there is a very significant opportunity for you to be finally broadening your range of services to your clients, but that's going to take a lot of extra help. And the Financial Review wrote an article, or published an article yesterday, that in lots of ways summarized what the ESS BIZTOOLS position is, what the position is of our affiliates who have been appearing in these various webinars over the last 10 weeks. And that is, there are significant changes. So I thought today I would share with you some of the comments that were made in the article in the Financial Review yesterday, because they are very interesting. And this article was written by Edmund Tadros, who's the professional services editor. It's actually on the Financial Review website. It wasn't in yesterday's edition. So some of the matters that Edmund commented on are as follows. The accountant of the future will need to be a compliance expert. Well, we know that. But then he went on to say, who can grapple with fast changing rules while providing broader advice to clients about their businesses. That's probably what you think you've been doing, or you know you've been doing for the last 3 months. Mr. Tadros is suggesting that this is going to be your life from now on, and I concur. It is acting as a chief financial officer for your clients. Let's go on with some of the other comments in his article. Savvy accountants have used COVID-19 as an opportunity to shift gears, to provide clients with wide-ranging business advisory help. You've had to go into areas that might not have been your traditional work. Some of your clients have needed business plans, budgets and cash flows, especially if they were wanting to negotiate one of the coronavirus SME loans. They needed help to navigate the crisis. But what's come through all this is that accountants need to be able to communicate with your clients in a wider range of activities than taxation. And in fact, he's saying that communication skills are now just as important as technical nous. And I think you'd agree with that, Ashley, wouldn't you?
Yes, absolutely, Peter. Couldn't agree anymore.
It's probably always been there, but it's becoming very obvious now that accountants need to be able to communicate. Use technology like we're using now to communicate with your clients. There's no reason that you can't be sitting in Darwin running an accountancy service servicing Australia. In fact, I know a couple of practitioners in Darwin who basically do that. He then goes on to say, Mr. Tadros, that compliance has been and will always remain a requirement for accountants. Not many accounting firms are ever going to be able to completely walk away from compliance. I know of one firm in Melbourne who has told me that's their plan, but most firms won't. I think that most firms will always have 40 to 50% of their fee income coming from compliance work. These are firms targeting small businesses and medium-sized enterprises. But advisory work in all its forms is growing, according to the Financial Review article. Now, there's some mixed stories at present. Ashley was reminding me of another article on LinkedIn earlier this week, which said that PricewaterhouseCoopers were reducing 400 team members from their advisory area. Now, the way big firms like PricewaterhouseCoopers look at advisory services and the way the majority of people who will watch this video look at it, I think are completely different. PwCs are acting for big international corporations, whereas accountants who are acting for small businesses and medium-sized enterprises, most of those clients are going to be with turnovers up to $50 million. Some might be a bit higher, but you won't be in the level that the big end of town operates in. One of the comments that Edmund Tadros mentions is that the concept of selling is generally out of an accountant's comfort zone. And I would agree with that, having been a senior partner in an accountancy firm and having consulted to accountants for the last 20 years now. I think it's an area that accountants need to sharpen up on, or most accountants do. It's not over technical selling, but you need to have an understanding of it and not be scared of it. In lots of ways, I think selling is communicating. He's been able to sit down and have a conversation over a cup of tea or a cup of coffee or a beer or a glass of wine and talk to your client, understand what they want, and then give them a proposal. After all, if they're already your client, you're well down the pathway of putting new services to them. But you need to be proactive in your discussions. One of the criticisms I get on an ongoing basis from small businesses and medium-sized enterprises is that their accountants are reactive rather than proactive. Put it to the clients and let them make their decision. We've probably talked about that. I know selling and even public speaking is not your normal skill set, and a lot of people feel the same way. In fact, I had a professional person who I invited to participate in these webinars declined because she indicated she was not prepared to do public speaking. Well, sitting here talking to a computer screen, running a Zoom discussion, Zoom webinar, I don't think it's anywhere near as nerve-wracking as what standing in front of an audience of 100 people might be. But the lesson I think from that is that accountants, and indeed all professional advisors, need to be able to get themselves confident to be able to talk in public, whether it's using Zoom or actually talking to a live audience. And that will help you sell. It will help you sell yourself, help you promote yourself and market yourself. The key to being a successful accountant will always come back to communication, the article said, and that's important. And it's well and good to understand your client's books, but you also have to be able to understand what drives your clients. And this has been one of the themes that we have been presenting in the last 10 weeks, that accountants need to be this chief financial officer type role. I was a chief financial officer in a listed public company quite a few years ago now, but you had to be immersed in the business. You had to understand it. Is it any different with your clients? Whatever their businesses are, whether they're a butcher shop, a steel fabricator, a medical practice, or a developer of new technology. If you are going to be their key advisor, their trusted advisor, I think you really need to understand their business and really understand what's driving them. You need to be able to guide them on the challenges of running a business, because that's what a CFO does in a public company. I'm not saying the CFO makes the big decisions. They don't in most cases, but the CEO is really relying on the CFO and the sales manager and the production manager and other people. Doesn't your client running a small business or medium-sized enterprise have the same issues? All it is in a big business is they're a bit bigger, and in fact, they've got more of these in-house experts. So good accountants often become a confidant to their clients is really the picture that Edmund Trados was trying to convey in that particular article. I would commend it to you. I think it should be on your wall in your firm, especially if you've got any doubters in your partnership or your leadership team in your firm. I would be making it compulsory reading for them. What are the risk areas for your clients? Having given you the background now that you're not alone in thinking about offering a wider range of services to your clients. Even a publication like the Financial Reviews now bringing it to your attention. But let's come back to what's happening in COVID-19 and how it's going to affect your clients. 30 September is now only 1 week and 3 months away. And it's a critical date. We're seeing more and more debate coming out of Canberra and Sydney and Melbourne and Brisbane, the capital cities. And the opposition around Australia, the political opposition, is saying, you know, the government needs to be extending beyond the 30th of September. But at this stage, JobKeeper finishes at the 30th of September. The Treasurer has hinted that they may continue it for certain industries. But I wouldn't be relying on that. At this stage, everything finishes on the 30th of September. As does cash flow boost, which doesn't get much publicity. But there's a lot of money being handed out between $20,000 and $100,000 for every business that employs staff. That was just automatic. No one had to apply for it. The tax office processed it. I even had people ringing me up saying, hey, I thought I had to pay my group tax, my PAYG tax, and the tax office has given me some money back. What's all that about? The coronavirus SME guarantee loans, they're loans of up to $250,000 for 3 years, 50% guaranteed by the Australian government. That ceases at the 30th of September because that was the condition that the money was made available on to the banks. If it's not been used in new loans by then, it has to go back to the Reserve Bank. And the government has made some temporary changes to the Corporations Act on debt collection and action against borrowers. And that also expires on the 30th of September. And in fact, the Financial Review had some other articles this week saying that the insolvency industry, which is in the doldrums at present, expects to be in full action in October and November. This is all targeted at the small business, medium-sized enterprise markets where most of your clients will be. I think your clients need a strategic planning advice now. Now, I know some of you are rather tired at present and have been saying, well, we'll look at this in October, November. I think that's going to be too late for a lot of your clients. They need that advice now. So let's look at what I think the priorities. If I was still running an accounting firm, which obviously I'm not, get your own house in order first. That's very important. Your firm must be analysed. And reset the strategies. Whatever strategy you had in your back of your mind for 2020-21, say in January or even throughout February, has all gone. It's all out the window. Things have changed dramatically. So you need to reset the strategies, especially for your clients. And we talked before about this conversation as part of the talking to your clients that was contained in the Financial Review article. My suggestion, have a conversation with each of your business clients and try to understand their vision. Where do they want to be? And how are they going to finance it? Ashley just referred to his expectation, and I agree. I think debtors' days outstanding will blow out during the 2020-21 financial year. People will stop paying their bills if they can get away with it. What pressure is that going to put on your clients? What business advisory services could you offer to your clients? And we're going to look at a few of them now. And in some instances, there will be more that you could offer. So please start thinking about it. But you need to be respectfully forceful, I think. You have to be proactive in these discussions with your clients because most of them do not really expect you to be able to start talking to them now about being the organizer of a monthly leadership meeting that's going to consider the finances, or in looking at the succession planning strategy within the business, or training your leadership and other managers in understanding of the key performance indicators or able to read the financial reports. They're probably not used to you being interested in doing those things. This is this wider range of chief financial officer services. My suggestion, have a cup of coffee with the client and sit down and talk to him or her about the services that you can provide. And if it's obvious that your client needs a service that you're not geared up to provide, it could be that exporting opportunity. The client needs to understand how they're going to finance it. How can they get the bank or someone to give them what their customer wants that Ashley was just referring to? Well, get on the phone and talk to Ashley and try to do a deal with him. I don't think you have to try too hard. Ashley will accommodate your requirements, and you'll be able to then say to your client, well, we can service your requirements, because we have project managed an introduction to someone else who we know is an expert in that area and can handle the arrangements with the Export Finance Insurance Corporation or whatever other organization it is. You do not have to do all of this work yourself, but the main thing is that you facilitate it for your clients. Otherwise, some of your clients will walk. They will go to someone else who tells them that they can do all this. Just a warning though, because I forgot to mention it a little bit earlier, if you've got your clients in commercial tenancies, they can review their rental situation. They can get some rental waivers and deferrals as long as they have qualified for JobKeeper. They don't have to be drawing the $1,500 per fortnight per employee, but they need to have qualified for JobKeeper to be able to avail themselves. And obviously they've got to be an SME, turnovers under $50 million. I think one of your most important roles is with the client's leadership team, because the leadership team needs to be developing a strategic plan for this year, a very important year. And don't leave this until October, November, please. It needs to be done literally now, in the next couple of weeks, so that the client has a definite plan, and a plan that takes them through the 30th of September. And perhaps if the plan indicates that they need some finance in December, they might be able to go and put an application in for one of those coronavirus SME guarantee loans now, or one of the other loans, whilst the banks are still in the mood to lend to SMEs. Because what I'm hearing, and I think what Ashley has said on a couple of other occasions, the banks mightn't be in that mood post 30 September. Do you agree, Ashley?
Yeah, no, 100%, Pete. It's there's already signs of it, mate. So yeah, all the things that they're doing, it's not all. Whilst they're okay to work with, they any bills that we're looking at new with them, we've got to provide fairly detailed commentary on how they've been affected and what their plans are post 30th of September. So yeah.
Prepare budgets and cash flow forecast for at least the next 2 years. One of the reasons I'm saying 2 years is Kate Carnell, who is the Australian government's small business ombudsman, published a submission she made to banks a few weeks ago, where she pleaded with banks to be very tolerant to small businesses and medium-sized enterprises until at least 31st of December 2021, not 2020, 2021. And she made the comment in that article that that was a very deliberate date, because she thinks that is going to be the very minimum of the troublesome period that businesses are going to have in this post 30 September period. So that's really identifying what the problems are going to be. I mentioned monthly business review meetings a little earlier. I think if you don't take anything else away from today, and I hope you're taking something away from what Ashley had to say, but if you take nothing else away from what I've had to say today, please sit down and talk to your clients about the concept of business review meetings, preferably monthly, but if they won't agree to monthly, quarterly, and don't go there expecting to discuss taxation issues. Maybe one of those meetings a year, which you probably already do, can be the tax review meeting. This type of meeting is meant to be a meeting that considers every aspect of the business. You should have monthly financial accounts. You should have an accurate debtors list, the debtors days outstanding, updated budgets and cash flows, drilling down into the financial performance. This is what happens in public companies. If you wanted a good idea of how all this can work, please go back to our website, www.essbiztools.com.au, and look at the webinars that have featured Andrew Geddes, well-known accounting coach, but also for the last 9 years was the chair of Green Cross, a top 200 ASX company. And Andrew, on a couple of occasions, has clearly articulated how the leadership team, which was 12 people within Green Cross, you don't need 12 people in most of your clients, but they had hundreds of employees, 12 people with the leadership team, and how they planned and operated the business. There's also a board of directors, but this was the internal leadership team that was running the business. And one of the key players in that was the chief financial officer, which is you. You're the accountant, and you should be wearing that hat saying chief financial officer with your clients. So to be minutes of meetings, the action plan, very important that these things are controlled, and the follow-up of reports so that when you have the next meeting a month later, there's been some follow-up, there's been some action. I think that leadership team should also be clearly identifying at least 3 projects, probably only 3, maybe less than 3 if you're a very small business, that is going to be examined by a small group. The small group might be 1 or 2 people to see whether it's got any potential to be a product or service that your client's business might evolve. And one of my pet subjects is, are you sure that the current selling price, the sales mix, and everything else that's going on in the business is going to achieve that profit that you've shown in the profit and loss forecast? Within ESS BIZTOOLS, we have a package which is based on some material that Andrew Geddes produced many years ago on how you can try to influence as the accountant what's going on. So it needs to be updated fairly regularly. But we also have a product which will assist you to monitor the charge out rates if it's a trades business, because obviously that's conditional on what the individual productivity is and how many hours can actually be charged to clients. And if you've budgeted that there's going to be an 80% productivity for certain trades and they're now only achieving 71%, the charge out rate is probably not right. And the decision then needs to be made whether that can be adjusted if you want to earn the profit that you have in your forecast. This is ongoing work, not just work you do at the end of the financial year once a year. And that's what your clients are going to be looking for. And that's what some people are going to be providing in the marketplace. Indeed, the people who have ESS BIZTOOLS subscriptions can do that and do that now. You might find that you lose a client to one of those firms if you don't start providing this. The financial systems that are being utilized should be able to assist. We had a management accountant talked in our webinars this Wednesday for SMEs, and he's going to be talking to accountants later in the year. But we talked about things like the inventory system. Too many people don't get it set up right, and therefore the job costing system doesn't work right. Now, for manufacturers and people who got inventory and are producing all types of jobs on different orders, it's vital that that system works properly. Otherwise, they really don't know what they're doing. And this formalized calculation of selling prices and charge out rates that I just referred to, it's pretty important if your client's going to achieve the profitability target. Big companies do this on an ongoing basis. And the way big companies run their business is create a series of small businesses because they think small businesses do this all the time. Well, unfortunately, they don't, because most small businesses haven't got a person like you in there helping run and coordinate all these things for them. Government grants should be monitored. I don't think there's going to be as many around after 30 September, but some will still be there. They still need to be monitored to see whether your client could apply for them. And future funding requirements. If banks are going to be very difficult to deal with post 30 September, don't forget the ability a company has to raise up to $2 million utilising Section 708 of the Corporations Act. or a company can raise up to $5 million utilising crowdsourced funding equity raising and repeat it again in the following years, if the market agrees, of course. So that is my summary of trying to give you an alert in businesses as to the services that you as the accountants can be offering to your clients. Now, there's plenty of other items than what I've summarized there today, but hopefully that will give you food for thought. You got anything you'd add to that, Ashley?
Yeah, I would just, with that, Pete, with the government grants there, particularly just a very recent example was the state government adaptation grants. I can't recall exactly, but 2 or 3 weeks ago, there was no warning at all. It got announced on a Tuesday. I got one away on the Wednesday, and the approval just came through 2 days ago on that, and the money was paid into the client's account today. But by the Friday, at about 11 o'clock Friday night, it was all gone. So there was 10,000 adaptation grants available, up to $10,000 each, which was 100 million. And that was within 4 days, it was exhausted. Now, they have just rolled that over and doubled the money. So there's another 100 million, which was announced a couple of days ago. They're giving us a little bit of notice this time, and I think it's you can lodge your applications on the 1st of July. Just my gut feeling is I reckon it's going, because we've got a bit of notice now, I wouldn't be surprised if people don't get up sort of 4 or 5, 6 o'clock in the morning and start lodging them. So I'd be surprised if that's not exhausted within sort of 1 or 2 days this time. So yeah, it is. And to qualify, I'm not telling people on the panel here or in the audience, but obviously you guys would know, but just it's critical to have all of your information up to date and your clients' information up to date. You know, there's a number of clients we talk to that, you know, hadn't lodged tax returns for a year or two, etc., and they just you can't sort of do too much with those people, and or perhaps you know, even their management figures for March, April, because they've got to show a reduction of 30%. So it's just critical to have that information up to date. But yeah.
Okay, yeah, and that was obviously a Queensland only one grant, and the other big thing is they've now split Queensland, so there's the southeast corner can only get 50% of the funding, and the rest of Queensland can get 50%. So that's a very interesting development. I smell an election in the air, but I probably shouldn't have said that. Okay. COVID-19 news update. There's not that much, but we've mentioned the coronavirus SME guarantee loans before. They definitely cease at the 30th of September. Whatever's left of the $105 billion that the Reserve Bank and the Commonwealth Government made available to the banks has to be returned to them. There's been some delays in the rollout of the $25,000 home or house or renovation grant scheme. The state government agencies are apparently having a bit of difficulty in getting their systems in place. I suspect one of the problems is that the eligibility criteria is based on an applicant's taxable income for 2018-19. Where the state governments are going to get that information from is probably being debated at present, but the tax office, I don't think, will just make it available because that is highly confidential information. So there might be a few more stories on that soon. The government is undertaking a review into all aspects of their COVID-19 coronavirus strategies. And I understand from the Treasurer that's going to be tabled on the 23rd of July. So there might be some more information and perhaps surprises that come out at that date. ESS BIZTOOLS can assist you as accountants to be able to offer this broader range of services to your clients. We have a range of packages, which I'm quickly just going to bring up there now. Our main COVID-19 package is within survival in difficult times, which covers all sorts of problems in Australia: bushfires, floods, earthquakes. We don't get many of them. I meant to say cyclones then. Research and development systems, government grants, strategic plans, budgets, cash flows, corporate governance, early stage innovation company process. You want to raise capital, crowdsource funding, equity raising, which we talked about a little bit earlier. So you can go to our website and have a look at that material. Next week, we have our next presentation. It's going to be the 11th week we've had these presentations for accountants. Friday the 26th. I debated whether to hold it on that date. We're very close to the 30th of June, and we know you're busy, but we are recording these webinars so you can watch them in your own time. And someone said to me the other day, well, I might be watching a whole lot of these in August. Well, if that's what you want to do, that's okay. And we are appreciative of the extra effort that you're having to make at present. The presenters next week are Paul Barnaby, who is a very experienced accountant, but these days offers consultancy services as a predictive accountant. So in other words, budgets and cash flows and what's it all going to look like in the balance sheet. And he's the representative for Plan Guru. And because we're talking about funding, we're introducing the first of the crowdsource funding intermediaries next week. It's Arthur Ackers, the operation manager for Equitize, who are based in Sydney and Auckland, New Zealand. I've interviewed Arthur on 3 or 4 occasions over the last 18 months. He really understands crowdsource funding, equity raising, and I think you will find he will give you an interesting insight. And especially for accountants, when you're thinking about how your clients are going to survive the cash flow issues later this year, debtors are likely to blow out. Banks might not be as receptive to issuing new loans. Raising capital could be one of the ways to do it. So please make a entry in your calendar to try to listen to those presentations next week. To register, please go to our website and click on to webinars. And for more information, you can go to our website, ESS BIZTOOLS Survival in Difficult Times, Learn More, where we have information on a whole range of activities to do with COVID-19. Or you can contact us, send us an email, peter@essbiztools.com.au. So please stay safe. Thank you for your participation in this webinar whenever you're watching it. Ashley, thank you very much for your contribution again.
Thank you, Peter.
And once again, I'd also indicate that if any of our viewers wish to talk to a very experienced finance broker, please give Ashley a ring, and his contact details are included on the information on our website. So have a great day, and thank you very much for being with us to watch this presentation. Thank you. Thanks, Ashley.
Thank you very much, Pete. Yeah, how's things going with you, mate?
Yeah, we'll just close this off first and stop the recording, and we'll finish.